Hello and welcome to this Careers Unlocked minisode, brought to you by the EY Foundation. In this series of minisodes, we're covering topics associated with banking, managing your taxes, and personal finance. We know these topics can be a bit tricky to get your head around, but they come hand in hand with the working world. So we've enlisted an expert to help us tackle some of the big questions. We're delighted to welcome Simon Morykin from HMRC's broadcast team to share some important tips to help us all understand more. If you've been listening to our other minisodes in this series, then you're already an expert in national insurance numbers and national minimum wage. But today we're going to be talking about side hustles. According to the Cambridge Dictionary, a side hustle is a piece of work or a job that you get paid for doing in addition to doing your main job. So this could be to top up your wages or a hobby that is turned into a money maker. So for example, maybe you have a YouTube channel which earns money through subscriptions or advertisements. But how can we make sure that we're correctly managing the money that we earn from this? So Simon, thank you so much for joining us again.
Pleasure.
I've given a bit of a brief definition in my introduction, but can you tell us more about what classes as a side hustle and at what point does it become more than just a hobby?
Sure. So the basic rule is, to put it in the most simple phrase I can, if you're earning over £1,000 a year from something, then you need to tell us about it at HMRC. So we find that a lot of people have these great little side hustles on the go. They might be topping up their earnings with it. They might have started a little hobby in lockdown that turned into now a thriving little business. I spoke to a gentleman on a podcast just the other week who started a little business with his partner, personalizing items like maybe mugs and cups, but he started it as just a hobby and now it's a thriving business. And he realized that once it's over £1,000 a year that you're making from something like this, then you need to start telling us about it, because you might have another job where you're earning, say, £13,000 a year, and that'll take you slightly over your tax threshold that you've got to pay tax on. And then this is extra money on top of that. So it needs to be factored in so we can make sure that you're paying it right. And it's better to start early and tell us about it than have further down the line find out that you actually owe some money. And the benefit to all this, Kathryn, as well, is if you are filing a self-assessment for that money you're making from a side hustle, then as the gentleman I spoke to called Ben the other week, who had that personalizing items business, he found that because he declared a self-assessment on the income, when he went to go and get a mortgage, that money was topping up his wage, and the bank, about to offer him a mortgage, they said, well, can you prove this income? And because he'd filed a self-assessment, it was verified by HMRC that he was earning that money. And that then topped up the money that he could borrow to get a house. So there is a bonus to doing this. And if you're making over £1,000 a year from something, you need to tell us about it. And you do that by filing a self-assessment online at gov.uk.
Okay, so essentially it's something that legally has to be declared. Important to do it sooner rather than later, and actually there's lots of significant benefits in the long term from doing that. So just to reiterate, it's if that side hustle is earning more than £1,000 per year, then it has to be declared.
That's right. If you're earning over £1,000 a year from something, you need to let us know about it. It comes down to your intention. So if your intention is to make money from something and you're creating online content with the aim of getting some money in and it goes over £1,000 a year, yeah, you need to be telling us about it. If you're buying items, doing them up. I had someone come around my house the other week and buy an old tatty mirror that I'd found in the garage. And they were doing it up, upcycling, which I think is a wonderful thing. But you're doing that and your intention is to make a profit on it. So you're not going to sell it in 3 years for half the price. So recently we did see online the story going around that if you're selling your personal possessions online, you might be taxed.
Yeah.
It's not always the case. If you're simply selling your old possessions like old clothes, a pushchair in the garage you don't use anymore, a tatty mirror that you found in the garage, you're not making money on that. You probably bought the pram for 500 quid and you're selling it for 100 at best. You're not earning money from that and your intention isn't to be a business. So that you don't need to worry about it. That doesn't affect you. But if you're online and you're regularly selling stuff and trying to make money from it and you are making over £1,000 a year from it, that's when you then need to get in touch with us and start telling us about it. There's actually a little tool, Kathryn, on gov.uk. If you search check if you need to send a self-assessment tax return on gov.uk. It will ask you a bunch of questions, and it's not reporting you. You're not even putting your name in at this stage. It's not checking up on you. It's just a little tool that if you've heard this on this podcast and thought, oh, hold on a minute, I'm not sure where I fit into that, because everyone's situation is slightly different.
Yeah.
There's a tool there where you can check if you do need to do a self-assessment. And if you do need to do a self-assessment, there's loads of help on gov.uk. Search self-assessment. There's YouTube videos. There's a lot of help there for you.
Brilliant. Thanks, Simon. I think that clarification and that recent story is really helpful, actually, 'cause I saw that too about, selling clothes online, and do we now need to declare tax or pay tax and these things? So that's really helpful to know, but also good to know that there's a tool that helps us figure that out as well. So what about if somebody does have a side hustle with the intention of making money from it and potentially turn it into a little bit of a business? How do people set up or register as self-employed?
So basically, if you're making that money and it's over £1,000 in a year and your intention is to run a business and keep that money coming in, then you will need to register for self-assessment. That's the first thing. So go to gov.uk and search self-assessment. And what you do is you log the money that you make and also the money that you spend on your business as well through the tax year. So that starts on the 6th of April and runs through until the 5th of April in the next year. So as we talk, we're not far off the end of January 2024. So the people filing their self-assessment at the moment are filing from the 2022 to the 2023 tax year. So the first thing you'll need to do is set up a self-assessment and register for it so that you can tell us about the money that you're earning. You should also keep your receipts, keep a log of your income and what's going out, and then make sure that you're putting money aside to pay tax on it if you're earning enough as well. So if you are making that £1,000 a year and it goes over that, then you'll need to think about, hang on a minute, I'm also paying tax on my other job, my full-time job if you've got one. You need to put a little bit of money aside if you're self-employed, because you're taking that money in and you're not paying tax on it. And then when the tax bill comes around, you'll need that money. So always put a bit of money aside.
Mhm.
And just keep your business records. There's a lot of help online at gov.uk about the things you should think about if you're self-employed. So again, search self-assessment and you'll find a lot of information on gov.uk. It might not be the most exciting website in the world, but it's free and it's all good information.
Great. And that kind of echoes some advice you've given previously in terms of national minimum wage. It really does come down to keeping your own records, doesn't it? And
Yeah.
really being aware of either what it is that you're earning through your own business or through a different employer. So if you're earning money and need to do the self-assessment, do you pay your tax differently than you would for a normal job where you pay as you earn and pay tax each month?
That's right. Yeah. So if you're in a regular job where you have a boss and there's a payroll department, and when they give you your pay slip, they've taken off your tax and national insurance, that's great because they've done it all for you. PAYE, it's called, pay as you earn. That's the system that HMRC here we use to collect your tax and your national insurance from your pay packet as you earn it. And that's nice and easy and it's done for you. If you are self-employed, it's different. And that's where putting money aside comes into it. So you need to save money that you'll probably end up paying on tax. And the best way to do that is to make sure that each month you're calculating roughly what tax you should be paying. So have a look online at gov.uk at the rates of tax and make sure you're just sticking that away in an account and saving that for when you need to pay. And the way it works if you are self-employed is you pay in two chunks of money. So before the end of January 31st, before that deadline, you'll need to have made two payments, normally one in the summer and one at the end of the year, like December time when you normally get your bills come through. So that's like two payments on your account, and it's catching up with the year that you've earned the money on, if you get what I mean. So there's
Yeah.
a slight delay
Yeah.
because of your self-assessment being filed. And that's the reason why, if you are self-employed and you need to do a self-assessment for your little side hustle, your little business, it's always better to file your self-assessment as early as you can. The tax year ends on that 5th of April. The new one starts on the 6th. And I used to find when I was self-employed that filing it around May worked best for me because, it's done, it's out of the way. You're not leaving it to last minute at the end of January. And
Mhm.
that way you've got time to figure out what you owe. So you
Yeah.
think, okay, I know I need to pay this in tax. well, how much have I saved? And it just means you're a bit more organized.
Yeah, you don't want that to come as a surprise to you at
No,
the
no.
end of the year. I do have quite a few friends who are self-employed, whether as PTs or doing other things, and I often hear them talk about putting time aside to do their tax returns and to do their self-assessment. And I think it does come down to just being really organized and
Yeah,
keeping all those records, like you said. And there's plenty of ways, and depending on how it works personally for you, you can do it through apps or just really organize yourself. But just keeping track of what it is that you're earning and spending, and then not having any of those massive surprises come the end of the year.
that's it. It's remembering that you've not got a payroll department, right? in your in
Mhm.
your in your bedroom if you're doing your side hustle. So it's down
Yeah,
to you. Just log what's coming in, what's going out, keep a track on it, and keep in mind that if you're going over your personal allowance of tax in a year, you're probably going to have to start paying tax on it.
brilliant. And it's obviously with being self-employed or having a side hustle, there is that degree of freedom and flexibility, but I guess with that comes a bit of responsibility. Like you said, there's no in-house department doing it for you, so there's a bit of housekeeping that we all need to do ourselves if that's the option that we're going down.
That's it. And I did see a tweet the other day from a lady who was creating online content, which a lot of people are doing now on various different websites.
Yeah.
And some of them don't always realize that it's an income.
Yeah.
It's an income. And if you're already earning good money, then this is
Hmm.
topping that up. And then you need to think about tax. It's better to get organized and get on it now. Now you've heard this on this fabulous podcast, than to suddenly receive a letter through, and we've found that you are earning money and you've not declared it.
Mm.
That's a situation no one wants. We don't want it. People don't want it. So just declare it.
Yeah, no, I'm so glad that you flagged that actually because, we're in an interesting time where actually income and jobs look very different than they did even a couple of years ago in terms
Yeah.
of what can be done through social media and creating your own platform. And no doubts, various income streams will emerge over the next few years too. So it's just keeping an eye and having that self-awareness of
Yeah.
what you're earning and those different streams too.
Yeah, absolutely.
Brilliant. Okay, well, again, that has been such a helpful conversation, Simon. So thank you so much for helping all of our listeners and me navigate their taxes and help me understand a bit more. I've definitely learned a lot through the series. So that's all for this mini-sode and for this series of mini-sodes. So thank you for listening. And if you haven't done already, do check out the longer episode and go back and listen to the other mini-sodes in this series. Simon, just thank you so much once again. Real
Pleasure.
pleasure to have you on
Thank you.
and see you all again soon.